Hello viewers, welcome to the Momentum Move weekly video series. Myself Brijesh Bhatia, Senior Research and Editor at Equity Master. So Nifty has been slightly for last couple of months trading in a range. 15,000 has been an upper end, 14,200, 14,300 is the base has been forming it out. And we have seen most of the global equities being trading at very stronger. And Dow in the last Friday have ended at all-time high. Well, if you look at the Nifty over the performance against the US and European markets, been slightly underperforming. So first, let's look at the global equities chart and how they are performing. So this is a chart since March 2020 lows, and if you look at Nifty was outperforming strongly outperforming between October November to the March 2021. So October 2020 to March 2021, Nifty has seen a strong outperformance, but since then we have been trading in a range bound. US markets, European markets have been trending very much higher. Well, the case is that we are into the lockdowns. The COVID cases are rising, and we have seen what are the impact of lockdown or COVID-19 cases in 2020 as well. So that's the reason we are slightly underperforming over here against the global equities. But even if you look at the possibility, yes, we can catch up. So second chart over here is the Nifty chart. And if you look at the Nifty weekly chart, well, we have covered in this last week momentum moves as well. The three dojis prior to the last week have formed morning star candlestick formation. So basically, morning star is a three candle reversal pattern. It's a bullish pattern where the bottom is being formed, and the follow-up momentum, which was the last week, the follow-up momentum has been very strong. We have seen a good bullish momentum coming into the Nifty last week. And look at the body of that candle, the last weekly candle, the blue candle is very stronger, indicating that the bulls are in control. And I believe that till 14,151, the recent low is not breached, we have formed the short to medium term bottom. And the Morningstar candle is formed right at 21 exponential moving rate, which is on weekly scale a very strong moving average when compared to the other moving averages. So I believe 14,150 till not taken out for all possibility that we have formed a short to medium term bottom. I just went on the top down approach and went on the point and figure chart over here. So my third chart is Nifty point and figure. This is a daily scale, 0.25% by 3. So what does it mean? That the X, if you look at the X over here, are basically the bullish. When the X bullish momentum is there, the X are formed. When there is a bearish momentum, the O is formed. Now 0.25% means that every 0.25% price rise, the X is formed. Every 0.25% the price falls, the O is formed. So basically that's the 0.25% by 3. So which means that when the price change 0.75, the column will be changed over here. Now, if you look at for last 3 to 4 weeks, Nifty has been trending in a range. And if you look at the 45-degree trend line on the upper side and the bottom side, so here I have drawn 45-degree triangle, which means I have taken a 45-degree from the lows, 45 degrees from the highs, and I have formed a 45-degree triangle. And basically, on point and figure, when this 45-degree support and resistance plays out very well, and in this time it's a triangle. So if in case if we are breaking out of the triangle, the moves will be fast and furious. Second, if you look at the broader picture over here, the prices are consolidating in a range. It has formed a rectangle base. After a rally, there will be a consolidation. So there is a no straight ruler momentum in any of the stocks. So there could be a retracement, there could be a consolidation phase. And after a rally from March 2020 to 2021, Feb 2021, we have it a high of around 15,431. Nifty has been consolidating in a range, and this has been a rectangle formation. So with the 45-degree trend line, rectangle formation, both having a breakout of around 14,930. So probably I'm taking roughly around 15,000 being a key psychological level. Plus 15,000 call has been aggressively written. So 15,000 will play over a very crucial juncture. 14,930, 15,000 a daily closing. We are heading for a big stellar fast and furious momentum. So generally when 45-degree trend lines are broken on point of figure charts, the moves are very much fast and furious. So I believe in case we break out 15,000 levels sooner, the rally will be very much faster. And if you look at the global markets, again they are trending higher, so we might catch up with the Dow Jones, we might catch up with the DAX to the higher levels. So once 15,000 is crossed, do not miss this opportunity of taking a long bets. We are expecting probably 15,489 is the first target of this 45-degree trend line. 16,000 is the second target. So we might see a huge rally coming into the Nifty after the 15,000 is convincingly crossed, and 15,490 is the first target, 16,000 is the second target. What could go wrong? Again, the lockdown scenario is still on. So if in case there is a more strict rules coming into the lockdown, lockdown extension can happen. uh, Again, it will definitely impact the economy, the slowdown would continue. And in case, the other risk is that in case the global markets see a slightly downtrend, that could be again the risk over here. But one chart I want to show you, which you should never miss out, is the dollar index to Nifty. Now, if you look at the dollar index to Nifty over here, this is very much important chart. I have compared it with the Nifty and dollar index. So since 2020 March lows, okay, and dollar index forming the highs, they are inversely rated. And whenever the trend line broke down or the resumption of bearish move has happened into the dollar index, Nifty has reacted very bullish, and that bullishness is very much fast and furious. Again, we must say that it was a V-shaped recovery, the moves were very fast. But yes, if you look at the recent scenario on dollar index on the right side of your screen, it has given a fresh breakdown of trend line, which means that the bearish move has resumed. And if the bearish move has resumed, Nifty is on the juncture of breakouts, and if that breakout happens, we again see the fast and furious move. So, which is with in sync of my weekly chart, with in sync of my point and figure chart. So, this charts is very much helping out. So, just keep a watch on 15,000 in the coming week. If in case that is broken out, we are ready for a stellar rally into the Nifty. And again, as I said, risk is always there, so you need to keep a stop losses over there. And in case my view might go wrong till 14,500 and 14,400 is not broken down on the downside, I think the short term base has been formed. For a medium term, 14,150 is the low, which will be very crucial for the bears to attack. Till then, we are very much bullish, and you need to keep the risk in mind at current point of time of the lockdowns. So stay long onto the market, and in case 15,000 rupees, look for a fast and furious rally coming into the markets. Before signing off, I request click onto the like button, click onto the subscribe button in case you haven't subscribed, and do comments how do you like our videos. Signing off, Brijesh Bhatia. Thank you. Do not forget to subscribe to my email newsletters, Fast Profits Daily, and get a free guide on how to trade markets like pro. Thank you.